Hey traders, welcome to Charts and Coffee. Hope everyone had a great, peaceful, relaxing weekend and you're ready for yet another. I want to get to a week where we say, hey, we're not going to have a rock'em sock'em volatility week. But then again, I think about it. And if we do have some pretty decent volatility with FOMC bar today, we move over into tomorrow where we get the JOLTS job openings number. Wednesday, we get ADP. So that begins the countdown to Friday's non-farm payroll. We get quarter to quarter GDP, quarter to quarter over quarter PCE. My gosh. And now that brings us to Thursday, where we get the month over month and the year over year PCE. Now, remember, the PCE is the Federal Reserve's favorite inflation gauge. That is their pet inflation gauge. That's the one that they use in their models to say whether or not they are looking at inflation stabilizing, dropping, etc. Big deal. Weekly jobless claims, FOMC Collins, Chicago PMI. Oh my gosh. And we're not even to Friday's non-farm payroll, average hourly earnings, and the unemployment rate. So that's what we got. And then as if that isn't enough, and it likely non-farm payroll will overshadow this, but we do have the ISM manufacturing PMI, which would fall under the inflation type data points, the hot zones that are released. So my gosh, this is the only reprieve we have from hot zones. Hot zones are not something to necessarily fret over. They're going to be intraday volatility opportunities, or for our short-term swings, we can see price action close the distance to some of our setups there. Now, keep in mind, gang, a lot of times, look, the human brain wants to do one thing, maybe two, maybe max three, and then all of a sudden the wheels fall off the wagon. I have to remember that too. So what we do is we compartmentalize every day, right? I don't have breakfast 3 times a day, although that sounds kind of awesome actually. But we don't do that. We have breakfast in the morning, lunch in the afternoon, dinner in the evening. Now, what if we had that kind of gear to shift into with trading? I day trade in the morning, I swing trade in the afternoon, and very end of the day, I can look at my position portfolio, breakfast, lunch, dinner. So it's not a matter of one over the other necessarily. It's not a matter of, well, I could be a day trader or a swing trader. It's breakfast, lunch, dinner. Do I know when to do each, right? So this kind of week, and as long as we're still under the uncertainty of what Fed Powell and company are doing with rates, are they going to hike in November or December, or are they going to pause? There's likely to be kind of a very difficult follow-through type environment. That's not what July presented. So one of the things you'll probably hear me say a lot is I don't care personally what I did in July. July went straight up. That's like looking at every year and comparing it to 2020. Great, we had a straight up year. We're not going to have that all the time. So what happens is we have a month like July, and we think that, well, this would be great. This is going to happen in August. It hasn't, has it? So my theory is this. Don't fit your trading waiting for the Julys of the year, right? Fit your trading to handle and even thrive in the Augusts of the year, the choppy, difficult. Because when July comes around, that's easy, right? If you can be a big league hitter and you can handle curves and knuckles and all sorts of terrible pitches, when you just get a fastball down the middle like July was, you're going to send that into the bleachers every time, right? So this is the way I'm going to think about dealing with August and likely September and likely October, and maybe the next window of a July, gosh, is way out in November. So to keep our pipeline full, we're going to keep in mind sometimes this economic calendar is going to be really helpful. All right, so again, let's jump on into the questions. As always, oh, by the way, and I know Lorna Butter just typed this in, or the Trish Boss and I have been working for the past month or so on, hey, what's working right now and what do we need to communicate to you all to help you manage not just August, right? Our members have been trading August with us. Has it been challenging? Absolutely. Has it been debilitating and crushing? Absolutely not. Our pipeline has been relatively full because, again, we can shift gears. So if you have been having issues with August, or even if you haven't and you're looking to just keep your pipeline full of opportunity, come check out what we're doing on Wednesday, 8 p.m., Simpler Trading, raghee.com/consistent. All right. And I'm going to show you what I've been doing the last, well, at this point, 28 days, and why it's not been necessarily, a nightmare type month, because A, we knew it was coming. It's a seasonal tendency. And B, we knew how to adjust. Yeah. How many of y'all watched the F1, the Dutch GP over the weekend? What happened in the Dutch GP? They got nothing but rain. Some of the racers started off on hards or on slicks, and then they didn't have rain tires. And it was really interesting watching each team adjust. And who wins the race? Well, lately, every time Red Bull and Verstappen, but they're adapting to track conditions better than anybody. And I love that analogy for traders. All right. Joseph, I usually see your videos after the close, but happy to be here on the live one. Very cool. Joe, yes, thank you. Thank you for making time to attend the live show. Awesome. Awesome. Every morning, same time, same channel, but that's great. Thanks, Joe. All right. Next up is iPod asked, do I subscribe to the idea that the Fed does not cut rates before the presidential election in an election year? We have tendencies, right? But no, I'm not gonna subscribe to that tendency. But to your point, we have to keep that in mind. Just as we knew tendency, July was very, very bullish. It has been over the last 5 and even 10 years. August is very, very choppy. It's been choppy bearish over the last 10 years, but it's just been choppy over the last 5. So what do I contrast that? If I look at all the election cycles, obviously they're not going to do the same thing, but certain patterns will emerge. So you're right. We want to keep in mind what those patterns may be, but I need to contrast those with what we are expecting, right? So let's go out to next year as far as we can. And let's just jump out to March of 2024. Now, if we are expecting to very likely be either at 5.25 to 5.5 or 5.5 to 5.75, I would expect those two columns to be the most prominent in March at the end of Q1. All right. So I go out to May. Now, remember, if we get to 5.5 to 5.75, gang, any one of the columns that is the tallest going out into next year, that's at 5.25 to 5.50, that represents a cut, right? Now, anything that's 5 to 5.25 would absolutely represent a cut. And we start to see that by June. So obviously at this point, Fed fund futures traders, not folks on television. I'm talking people who have put some skin in the game, and they're not talking about it. They're just doing it, right? I like price action because it's not what people are talking about. It's actually what they're doing with their capital, which is, to me, when people say, Rog, what do you think is going to happen in the market? I said, you should not care one iota of what I think. Analysis on its surface is just that. It's a surface level conversation. It's cocktail talk, right? Everyone in the room knows, oh gosh, Rog, you're pretty much bullish. Why? Because that's the way my trades are, right? So open trades are analysis. Open trades are much better than analysis. This is an open trade. This is not just a talking head on television, right? That's why I love this stuff. If you're wondering, Rog, why do you use this target rate probability thing so much? It's people placing their bets with their money, right? So we can see come June, not convincingly, but all of a sudden it starts to become prominent. By July is discounting nearly, look, if I add up 30%, 30%, 15%, 4%, that's the overwhelming expectation for rates to have been cut either before July 31 or on July 31. Now, summertime cuts are a little odd, but absolutely, we are expecting rates to be lower by the time we get to November. There's your November 20. Now, granted, that's over a year away. That's a lot of non-farm payrolls and a lot of GDPs and a lot of PCEs away. But this is what I'm going to use to measure it. So thanks for the question. All right, next up. Hey there, Ryan. How are we feeling about XLE going into the week? All right, so here's what we see. Yes, here's what we see. Let's use the data. And this has been an active sector for us, XLE, XOP. Once again, if traders want to know what I'm thinking, look at what I'm doing, right? And not always are the two things alike. So when you hear people talking about this is what the market's going to do, ask them, what's your open position? then you'll find out the truth, right? So my open positions in XLE and XOP have been to the long side. And so ultimately, Ryan, what I want to do is either find the relative performance at the sector level or at the individual stock level, right? So Marathon, Conoco, Valero, Pioneer, Phillips, Williams, they're all bullish. That's going to be my relative outperforming stocks in the XLE. So when I look at the structure, I will say it's a little troubling that I can't get the top two weighted stocks in the XLE to move higher, meaning Exxon and Chevron, at least, at very least. Exxon's above the 200, but it's very disappointing that Chevron can't get any traction above 160, above 161. So this is where XLE is tricky because most of the weighting is in these two names. I like XLE. I also like those relative outperformers, and that's where I'll look to buy the dip. Now, let's not neglect XOP. So, Ryan, I'm bullish XLE. My recent trades have actually been long calls in XLE, and it's going to be the same with XOP. XOP is a very cool way to take advantage of what's going on in crude and what's going on in natty. So if you've been a fan of, hey, Rog, there could be some strength in natty. I'm actually still focusing on natty gas stocks and not natty the commodity, because natty gas stocks and the FCG natural gas company ETFs look far better than actual natty does. So the companies in natty are bullish. Natty itself, not quite there yet. All right. So that's definitely what we want to remember. What do we see, right? Not what people are saying. And what do we see translates into, Rog, what are you looking to actually do? What have been the past positions that you've taken? Because I just talked my book. That's it. I'll be straight up. I know that sometimes gets a lot of grief. Oh, they're just talking their book. What else would they say? I want to listen to people who have skin in the game. And when they're recommending a stock, it's either because they're in it or they're going to be in it, right? That's the ultimate in what we want to understand about anyone's trading, right? Okay, next up, Mark, what are my thoughts on Google? I would probably go with GOOGL. I'd probably go with the Goog L over Goog, but really it's 6 of one, half dozen the other. But they both lost their uptrend. So it's a very fresh transition to a neutral underlying market cycle, which doesn't mean I'm bearish. It just means I'm not as bullish or I'm not anticipating higher highs as I once was. XLC is struggling. That's the sector that Google is nested within. Meta is struggling. So here's what I'll say, Mark. I don't have a problem with Google or Goog or Meta or even XLC. The adjustment that we have to make is either to a day trading playbook where that's a 5-minute time frame. Let's get in and out within one of the two windows every single session, or I can look at 1 hour short term. So when I think about short term, I'm being specific to short term swings and day trading. And again, because we know breakfast, lunch, dinner, there's a time for pancakes, there's a time for a sandwich, there's a time for dinner, right? Whatever anyone's dinner is. Some salmon and rice sounds pretty good, actually. But whatever your window is, ask yourself, what's the best thing I can do in the early window? So for Goog, I'll likely focus on being a day trader, Mark, until about 10:35, maybe 10:55. Then I'll put on my swing trading hat. And if there are short-term swings in this environment, then I'll look at that. But mostly the activity and the clarity has been in the 5 minutes. So take a look. The pullback on the daily looks okay. I mean, I'm certainly not a bear, Mark, not at all. It was bullish. Now it's neutral. But look at the 5-minute chart. I know this is pre-market, but look at the structure. And for those of you that don't know what structure is, and you're wondering, okay, Rog, when you say structure or something's an uptrend or bullish, what are you looking at? And that's a specific indicator that I have running on all my charts called the multi-trend. So we'll talk about that, how it's the foundation, how I build all my trades from the bottom up, from that multi-trend up. So again, if you haven't registered all yet, simpletrading.com/consistent. Let me give you a sneak peek here. So when we say bottom up, from the foundation up, I'm quite literally talking about the bottom of the chart up. So what's my structure, right? And some of you might have heard me talk about this in the past. Structure dictates strategy. Most folks just find a strategy that they like to deploy again and again and again, or even worse, they have a symbol and a strategy that they just like to rinse and repeat. That's like you and I going golfing, and all you do is grab your favorite club out of the bag for every shot. That's what most traders do. If you went golfing with a buddy and all they did was grab their seven, although you could probably get through a majority of 18 holes with seven, but you just see them grabbing their favorite club again and again and again, you're going to think, gosh, they actually don't know how to golf. We know in golf, the shot, right? The shot is going to dictate the swing, the club, right? The strategy. So same thing in trading. We need to know the lie of the ball. And that is structure. That's at the bottom of the chart. And then we move up through the chart, knowing what the lie of the ball is, if you will, what those track conditions are, and then we can go from there. So that's what I would do on Google. Where do I have the best advantage this morning? 5 minute, right? And that's going to be a really easy way to specify what time frame I'm going to look at, and therefore I'll look to be a day trader this morning. That's something we'll probably look at when I jump in to the mastery here in a moment. All right. So next up, if we're talking about Google, let's talk about the NASDAQ. Sadly, a lot of traders have a very difficult time stop looking at tech, right? Everything's about what's Apple going to do next. One thing we haven't cared at all, whether it was day trading or swing trading in the mastery, is Apple. And really, NASDAQ hasn't been a big concern. So remember, as important as it may be, as important as the NASDAQ and tech weighting may be, it's not the only game in town. And I love questions about the XLE. It's not the only game in town. And if it does get out of its own way, terrific, right? That's going to help everything. Do I see a lot of clarity on the 1 hour? I don't. Do I see a lot of clarity on the daily? Let's open that up here real quick. It's in a downtrend. It's trying to get out of its own way, but it hasn't yet, right? So this is where forcing a trade in a favorite symbol or a symbol in focus is going to hurt traders. What's the best way to trade Apple today? Let's remember we can always shift into day trading mode. Not all day, 2 specific windows a session. And I'll get into those specific sessions. Gang, I know a lot of you are thinking, Rag, how do you pick your strike? How do you pick your expiration date? What are the 2 windows? We'll get into that in a lot more detail with examples on Wednesday. All right. So if Apple's trying to bounce, great. If Apple's in an intraday uptrend, great. Where does that map to? An index sector stock. I'm going to look at the NASDAQ. I'm going to look at XLK. XLK opens up Apple, but maybe that also opens up Microsoft. Take a look. Why those 2, Rag? When we're watch list building in this reality, it's not about scanners and looking at a bunch of different stocks that share technical criteria, right? In other words, they're all doing something on an RSI or they're all doing something on an MACD. Doesn't mean they're moving together, just means they share similar weather, if you will. What we want to do is take a look at stocks that are connected to each other. Take a look at sectors that influence those stocks and the index that influences those sectors. And if you look at that, then you realize why NASDAQ, XLK, Apple, and Microsoft are, especially if they're moving up today, it's going to be something to watch, right? Because you understand that connective thread. And that's the best way to build a watch list, gang. That's absolutely the best way to. So we took a look at the NAS. Let's take a quick look at the S&P. And then Rainy Days is asking, do I see head and shoulders on the SPX? SPX has dandruff? Oh, man. That's the only head and shoulders I even think about. I don't use that pattern, Rainy Days. Never have, never will. I'm not a big fan of chart pattern. Nothing wrong with that, my friend. It's a popular pattern. I get it. Price patterns are my preference. You might say, Rob, what's the difference between a chart pattern and a price pattern? Price patterns are typically the different combinations of horizontal support and resistance and trend lines, both of which are highly subjective, right? If I show a dozen traders SPX on a daily, I'll probably get at least a half dozen different lines and levels being drawn. For me, I want to look at a price pattern, right? Now, what's the difference? A price pattern is different ways of using open, high, low, close. You hand that same chart to those same dozen traders, everyone's going to agree on what the open, high, low, close was on the chart because it is what it is, right? If I use more objective levels, then I've got something useful. So the next thing I'll tell you is keep an eye on the ES, and I'm going to go through the same process. Is the ES in an uptrend? It is. We're actually triggering one of my favorite price patterns as we're moving up through 44.30. So there's some bullish momentum north of 44.30. Yeah, Selson Blue. There you go. Thanks for the question, Rainy Days. I think that's what a lot of folks ask. Rog, what's the difference between a price pattern and a chart pattern? By the way, price patterns are easier to find. They're great for intraday, end of day, weekly, right? And they're much more objective. So anything above 44.30 is fairly bullish. The 5-minute is bullish. So the ES in an uptrend, my friend, translates to SPY, and yes, your SPX. And I would look to the long side, at least for a short-term window. Today, maybe the next 1 to 3 days. As always, gang, thanks so much for being a part of Charts and Coffee. Caffeinate and dominate, my friends. We have a busy, busy week ahead. Lots of data. Take a look at that economic calendar. My Sector Secrets Mastery folks, take a look at the hot zones that I've outlined in Top Tier Outlook, and I will talk with you soon.